feeling. All right, what's up, guys? Good morning, happy Tuesday. Give me a quick sound check here. And we got an interesting morning on our hands. All right, good morning. Good morning from Hamburg. You're making me hungry. Good morning, Andrew. All right, guys. So, some pretty good pressure here in the futures this morning. You got the NQ down just shy of 1%. The S&P future is not too far behind. And then the bond market, the ZB, and spanked. They spanked it yesterday, and they're spanking it this morning. So I think, as a trader, it's really important. You don't want to be bullish. You don't want to be bearish. I think you want to remain flexible. The way that I try to look at it is, I think I've got some pretty good indicators, and my job is not to think. My job is not to have an opinion. I am a faithful servant of the indicators. So on the NQ here, and for full transparency, I'm long crowd, I'm long square. At this point, I don't think either of them work. And we got short the futures this morning about $80 higher. Shorted the QQQ futures. So first thing to look at here, the concept of reversion to the mean. No matter the market, whether it be the futures, the forex, the equities, at some point, everything always comes back to the 21 EMA. Now, with that being said, as far as the weekly chart goes, we haven't been back here to the weekly 21 in about 30 weeks. October, November, December, January, February, March, and now April haven't come back to that weekly 21. And I'm not vouching that we're going to pull back to the weekly 21. The point I'm trying to make is the market will look really good here. All right, the structure will be bullish. We'll have a big 3 buy signal. Everything about the weekly chart will look really good, all the way down to about 420. Meaning tomorrow morning, the QQQ could gap down $20. The weekly chart is still going to be a beauty. Not going to break the structure, not going to cancel out the buy signal. So with that being said, when you've had a big move like that, you are that far above weekly support, you haven't been to your weekly 21 in 7 months, what you do want to look for, problems across lower time frames. Signs of exhaustion, signs of things maybe needing a little time to catch their breath and potentially pull back. But again, the point I'm trying to make is if we're at the very beginning of a bigger pullback, we could go much lower. Things remain bullish. Got to keep that in mind. So on our daily chart here for the NQ, we've had this daily squeeze, and it's a bit of a tough read here. From the inside out, it's not great. We've got sell signals on the 5-minute, 15-minute, 30-minute, 1 hour, and a 2 hour. And now the big level here today, and I'd imagine for the rest of the week here, the daily 21 EMA. Now the pattern has been, you pull back to a 21, to the daily 21, and they rip it higher. Pull back to the 21, they rip it higher. All right, again, and again. A good rule of thumb, you get 2 closes under your 21 EMA. Not a guarantee, not a promise, but a possible indication. It might be time for a bigger pullback. Price pulls back to the hourly 21 EMA. You get a couple hourly closes under it. You might pull back to a 2-hour 21. You pull back to a 4-hour 21 and you break it. From there, you might pull back to a daily 21. 2 closes under the daily 21 EMA could open the door for a bit more downside. And then we got this combination here of a 4-hour, a daily, and a 2-day squeeze. I'm not here to tell you they fire long. I'm not here to tell you they fire short. What we do know, though, about that nested squeeze, you get that domino effect. 4-hour squeeze fires long or short. That can trigger the daily squeeze to fire long or short. Daily squeeze fires, and then comes your 2-day squeeze. So a very big level today is going to be that 21 EMA on your daily time frame. And if you look here at your lower time frames on the 4-hour, we got the 4-hour squeeze, and the structure is not the best. Not the best if we're looking for an immediate turn higher. You'll notice they try to get the slingshot going 1, 2, 3 times and no breakout. What that can potentially create is a little bit of a bull trap. They try to buy the breakout. They try to buy the breakout. They try to buy the breakout again. Close but no cigar. And now as far as structure, we've got a negative shift here of the trailing stop, the ATR trailing stop, and now we're getting our 21 EMA under the 50 SMA. Regardless of the time frame, 21 under the 50 makes it a little easier for things to go lower than for things to go higher. Until they correct that problem, until they get that 21 back above the 50, it's going to be tough to continue to trend higher. Doesn't mean we roll over. Just means the rapid upside. You wake up, the market's green Monday through Friday. That game can kind of come to a standstill. And then on the squeeze here, if the squeeze does fire short, that can take us down to about 18,250. And then on our 1-hour time frame, the big level of support yesterday was your hourly 200 SMA, which they've tested a few times here, and now we've broken it. Right. They test it. Nice bounce. Whoa, come on back. Right. They test it back here. Beautiful bounce. They test it here. They try bringing it back above, and now you're getting a pretty big break. Structure goes bearish. Squeeze fires short. We have a negative 10 on the big 3 score. A good rule of thumb, the hourly chart has a negative 10. We ain't ready to go higher just yet. So yeah, we're short the NQ from about 18,424. So pretty much from back up here. And then as mentioned, I got a couple longs heading into today. And the thing you always want to keep in mind, you can do the best job possible. Fight for a good entry. You take an A+ setup. It's got the structure, the buy signals. When you lose the wind at your back from the S&Ps, the QQQ, etc., the good-looking setups, they stop working. Will there be a few that work? Of course. But as far as the probabilities game, that gets that much more difficult. Perfect squeeze, buy signals on every time frame. S&Ps and the QQQ throw in the towel. They're just not going to work. Or better yet, they're not going to work like they should. So for those of you in the mastery, our 2 trades here in Square and Crowd. All right, now Square is a perfect example. Perfect setup. Structure is bullish. It's got a squeeze, got buy signals. It's a perfect 12 out of 12. So Square would be an A+ setup. It's not going to work. Gapping down to about $80 this morning. The odds are, guys, we're going to have to take off Square. Breaks at 21 EMA. Looking like we're going to close under the mean. You got to cut it loose. Did everything we're supposed to do. No wind at our back. And then on Crowd here, you got a little bounce off that daily 50 yesterday, but same thing. Crowd could be the holy grail. Buy signals and squeezes on every time frame. Crowd is meaningless. And I say this with love, of course. If you're going into today and you're long, chances are, guys, whatever stock you're long, it's meaningless. It's not a Square problem. It's not a Crowd problem. It's not going to be an NVIDIA problem or a Microsoft problem. It all comes back to mama and papa. S&Ps, and the QQQ. So the game plan for today is manage our risk accordingly. Crowd breaks that daily 50, got to take off the trade. And if SQ breaks the 21 EMA, got to take off the trade. Now, aside from all the sell signals in the NQ, one thing I like about the futures, you wake up, you see some warning signs, you see a few things that indicate, all right, the market might be wanting to pull back here. You can throw on the short as a bit of a hedge. Right. The odds are today, I'm going to take a bit of a hit on crowd. I'm going to take a bit of a hit on SQ. From there, if the QQQ just pukes, that might cover half of my losses. That might cover all my losses. Who knows? Between the three trades, I might end up profitable. If the QQQ really breaks down, and then I think another interesting chart here would be the junk bonds, HYG, HY Jizzle, and a good gauge of market direction. Usually, junk bonds going higher. Good for the S&Ps, good for the QQQ, good for the equity market. Now, the action here yesterday, not very promising. We came into the week, really good setup. Squeeze, buy signals, all the fixins. The gap down yesterday in the flush, little bit nasty. So as one potential gauge, keep an eye on that out of the corner of your eye. That daily squeeze break short, not a guarantee, not a promise, but another indication. Might be time for a bit of a pullback. And hey, for all I know, by 12 o'clock this afternoon, the market might be green. And by Friday, we're back at an all-time high. I think it's very much a minute-by-minute, hour-by-hour kind of market. But I want you to set your expectations properly. Right? The context is, and let me put it in terms of percentages. QQQ. All right, QQQ closes yesterday 445, we'll call it. We've got our weekly 21 down there at 420. Meaning, from here, QQQ can go down about 6%. The weekly chart is still bullish. Every indicator on the weekly chart would say, hey, you should love that pullback. You're in a bull market. Your weekly chart is beautiful. Structure, momentum, the whole nine. Whatever the time frame is, in an uptrend with buy signals, a pullback to a 21 EMA is a beautiful thing. You don't jump in and blindly buy it. But if they do pull it back, they find support, they stabilize it, they clean up all those lower time frames. It's a beautiful thing. Now you're getting a chance to buy the bull market at the buy zone and not all the way up here. So again, I'm not saying we're pulling back to a weekly 21. I've got no freaking clue, as none of us do, but just more so context. Because I can promise you one thing. If the QQQ goes down 5 or 6% from here, on Twitter, on Facebook, on CNBC, they're going to wheel out the old markets in turmoil special. Don't buy into that crap. Right? See it for what it's worth. If this was a 5-minute time frame, and we've got a beautiful 5-minute uptrend, would you panic about a pullback to the buy zone? I don't think so. The pullback to the buy zone on a weekly chart, it's a lot bigger percentage-wise. Right? It's a little bit scarier. You got to see it for what it's worth. So that's how I'm seeing things on the QQQ. And then for the S&Ps here, pretty much the same song and dance. If you look at our weekly chart, we haven't been to the weekly 21 since October, November, December, January, February, March. Up, 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 and away. So at 52.40, 52.40, we could pull back to, we'll call it 49.50. Same thing. Not saying it's going to happen, but context. The S&Ps could pull back about 5 or 6%. All the talking heads on CNBC will lose their crap. It's a beautiful thing. I, for one, if we do pull back that much, I'm going to be down here at that weekly 21, arms wide open. I would love that. Now, the exchange is, all right, I've got my square, I've got my crowd. I'm probably going to take a little hit here today. The exchange is eventually, if we do pull back that much, I can buy my favorite stocks at a much better entry. Way less risk, heck of a lot more reward. So take it day by day, and then I think a few things for y'all to watch today. I got a little double chart here. Couple of internals, the ticks and the advanced decline. Dollar sign ADD, advancers versus decliners. Pretty simple. ADD going lower. A good indication more things are getting sold off. Before you come in today and buy a dip, pay close attention to the ADD. If the action resembles yesterday, gaps down, and just lower and lower and lower all day, you want to be a bit careful trying to buy that dip just yet. And then for the ticks, all right, ticks gauge buying pressure versus selling pressure. You got the ticks hanging out up here at 400, 500, 600. The bulls have got the intraday edge. A lot more buying pressure. If I'm buying a dip at an hourly 21 EMA, if I'm buying a dip at a daily 21 EMA, wherever I'm looking to buy a dip, I've got to see the ticks telling me, yeah, the bulls are stepping up here. Vice versa, minus 500, minus 600, minus 1,000, the bears have got the edge. I can't be buying a dip if the ticks are getting hammered. So a few things to watch there. And then, yeah, guys, aside from that, I don't think a morning where we're looking for scans and looking for entries. I think the entire focus should be the S&Ps and the QQQ. Again, with the context being, we could pull back about 5 or 6%. Nothing has changed. Lower time frames are going to be ugly. The daily chart might get a little bit ugly. As far as the weekly chart goes, 5 or 6% pullback from here, totally normal. Right. All that would be, if that is the outcome, is the ebbs and the flows of the market. The best moves, they start at the weekly 21. That kicks off the rally. And eventually, at some point, you got to come on back home. Would not be the worst thing. I, for one, would love that. So any questions, anything I want to take a look at, feel free to throw it at me. But again, I say this with love. I say this as a friend. My stock picks, your stock picks, they don't matter until the indices can clean things up. It's just kind of the reality. You're playing a numbers game. When the indices are grinding higher every day, a little bit tongue-in-cheek, but if you got that wind at your back, you can wake up blindfolded, buy anything, and you got a pretty good chance of making money. When you lose that wind at your back, it becomes a bit more of a needle in the haystack kind of thing. So potentially for a few days here, maybe a few weeks, we're going to shift that game plan from buying pullbacks to shorting the bounces. Market grinding higher. You look for a pullback to a 1 hour 21 EMA. You're looking for a 15-minute, 30-minute hourly squeeze, and you buy it. If things are trending lower for a bit, it's the opposite. You can short a bounce into a 15-minute, 30-minute hourly 21. You can look for a 15-minute, 30-minute hourly squeeze, and you short it. Same entries, same exits, same setup, same indicator, opposite direction. Let's take a look at the Dow Jones futures. Down just shy of 1 percentile. And it looks like they're going to have to hold that 21 EMA. Let's go look at the RUT, the IWM futures. What a good example. Beautiful, picture-perfect daily squeeze. I don't think it works until the S&Ps and the QQQ can clean things up and turn the corner. I'm not saying you short the IWM. I'm trying to preach you be a bit patient in buying it. Crude oil. Now, crude oil kind of lives in its own world. Beautiful daily squeeze, a good-looking weekly squeeze. That likely continues to work. That shouldn't be as impacted by the S&Ps, the QQQs, the Apples. Again, crude is kind of its own beast. So I would say, if you are looking for a pullback opportunity, that might be the best spot to look here. Good old crude. That dude crude. And then the Bitcoin futures, down a healthy 7%. Same rules apply. And I know they're different, but in my mind, Bitcoin and QQQ, they kind of move together. I don't think a coincidence that QQQ is down 1% and crude, or Bitcoin rather, is down 7%. You look at a weekly chart, and I'm not saying we pull back to a weekly 21. If we do pull back to a weekly 21, nothing has changed. They're not breaking the trend. They're not breaking any structure. It's a pullback to a buy zone. Context. And then what else can I show you this morning? Bitcoin, S&Ps, and again, the bonds. CB. Very nasty action. A big level of support here. Should that break? Not a guarantee. Not a promise. An indication things might keep on going lower for a bit. And then aside from that, we got Powell on Wednesday. Perhaps JP comes out and saves it. Or perhaps JP's got the taste of blood and tries to send it a bit lower. Take it day by day. Take it hour by hour. Put the faith in your signals, and we'll keep on keeping on. But yeah, chances are crowd and square. We got to say sayonara today. Now, granted, there's going to be times where you find a good setup, you get long, the S&Ps keep cruising higher, the QQQ keeps cruising higher, and for whatever reason, the stock you got long doesn't work. Out of all your losing swing trades, there's going to be a few like that. What I've noticed over the years, the majority of the time, when my swing trades don't work, rarely does it have anything to do with that stock. I could be long Google, I could be long crowd, I could be long Airbnb, Coinbase. Vast majority of the time, when they don't work, it's because the S&Ps and the QQQ crap the bed. All right, think of some of our recent trades in our room. Best Buy was beautiful. The market was doing its job. Microsoft worked out really good for us. Market was doing its job. All right, wind at our back. Bank of America. Nice push, and the market was pushing higher. Now Square and Crowd. Probably going to be losing trades. Not because of Square, not because of Crowd, but because of the indices. So I say that to say, before you fire up your scans, before you're looking for a new name to get long, whatever you deem to be your buy signal, you have to get that in the indices first. If Square opened up flat today, remains a beautiful daily squeeze, I can't buy it. Not because of Square, but because of the market. Alrighty, guys. So let me get caught up in the chat here, see what you got. And we've got about 10 or so minutes here to hang out. But the month of April is off to an interesting start. Indeed. Claudia, great question. So Claudia's asking, when can we get a better sense of, all right, we've pulled back, we've taken out the 4-hour 21, the hourly 21. How can we get a better sense of, all right, that the selling is coming to an end? Everything's trying to stabilize. Is this a spot where things can turn the corner and go higher? Think of it, Claudia, like a graduation process. And we'll take the S&P futures as a good example. All right, if you look at our 5-minute time frame, the 5-minute chart is busted. All right, -12, broken structure. The first little indication, selling pressure might be drying up. We might be a bit closer to finding a bottom. Would be the first 5-minute buy signal. If they can graduate, so to say, the 5-minute from a sell signal to neutral, right? The big 3 bar goes from red to blue, and then we go from neutral to bullish. The big 3 bar goes from blue to green. There's your first little indication. Now that's just a 5-minute time frame. If they can take the 5-minute from bearish to neutral to bullish, the next graduation process would be the 15-minute. All right, we've cleaned up the 5. We finally got a 5-minute buy signal. Can they do the same transition here on the 15-minute? Take it from bearish to neutral, then from neutral to bullish, right? Red to blue, blue to green. If they can take back the 15-minute, okay, now what about the 30-minute? The day we wake up and there's no more lower time frame sell signals, and we're getting a few fresh buy signals, there's your first indication. If they cancel out the 5-minute sell signal, they cancel out the 15-minute, but the 2-hour, 1-hour, 30-minute still have a sell signal, I don't think we're looking to buy it just yet. We got to get rid of all the red and then bring on some fresh green. And I think you put a bit more weighting, of course, in your bigger time frames. If I get a 5-minute buy signal today, but my 2-hour, 1-hour, 30-minute, 15-minute, they still have a sell signal, I can't buy it. The 5-minute might serve as a heads up, right? That they're trying to clean things up a little bit here. But until they get rid of all of them, and then we've got nothing but lower time frame buy signals, we want to remain a little bit careful. A little bit careful. Yeah, we're spilling out pretty good here. We got a little bit of leakage on aisle 5. Somebody has spilt the milk. Nasty. Nasty, nasty. Steve, that'd be my assumption. And we know what they say about assumptions. But yeah. I mean, let's look at Google, because if anything's going to work this week tech related, it'd be Google, I think. A beautiful weekly squeeze, big breakout yesterday. And now this morning, Google's back down to 152-ish. back under the breakout level. Yesterday, you couldn't ask for a better setup. Big breakout above the previous swing highs. The daily chart was a perfect 12 out of 12. A beauty of a weekly squeeze. It's not a Google thing, though. Right. Google might be a multi-million-dollar condo. The neighborhood it's in is on fire. If that at all makes any sense. So yeah, that'd be my assumption. Any calls that expire this week, tech related, probably not going to work. And then you bring up a good point. Is it a tech thing or is it more of a market thing? One thing I noticed yesterday was there was no rotation. Rotation can keep the ship afloat. Down goes the tech stocks, but financials are taking the lead. That wasn't the case yesterday. The semiconductors look decent, but as a general statement, financials, healthcare, everything kind of got sold off. That would indicate calls on anything is probably toast. And that'll include my square and my crowd. I can't talk myself into smoking the hopium. All right, it's a good setup. Even though the market's grinding lower, I think it'll work. It's a very, very dangerous kind of thinking. That kind of thinking can lead to a loss turning into a much, much bigger loss. And the whole name of the game is, guys, when the market is easy, all right, relate it back to the weekly 21. When we're pushing, we're getting that big move off that weekly 21. It's a little bit like the fish are jumping in the boat. Not very difficult to make money. When the party comes to an end, when we finally get that reversion to the mean, I've done it to myself. I've seen a lot of traders do it time after time. Whatever they made on the way up, they give it back tenfold on the way down. They keep on forcing the issue. They keep on buying the calls. They refuse to take off their losses. The way I look at it is when the pullback finally starts, there's a really good chance I'm going to take a few losses. And really, unless I'm sitting there in cash, the end of the rally will usually mean I'm taking a few L's. My number one job, minimize how much I'm giving back. Not playing the hopium game, but more so saying, all right, Microsoft, Best Buy, we had all these nice winning trades. We had some nice futures trades. My number one job now, make sure I don't give all that back. I've done it before. I've seen it done before. You'll have a $10,000 account back here. That account will be $50,000 up here. Then the pullback happens and you've got a $5,000 account. It's a very, very vicious cycle. Very vicious. No, listen, you got a great entry in a square yesterday. When it comes to losing trades, guys, we got to have the proper mindset. Now, there might be times where we take a really crappy trade, like a bad entry, a bad setup. That can be chalked up to a mistake. Based on the quality of that daily squeeze, anybody who bought Square yesterday, great job. You bought an A+ setup near the 21 EMA. This one's just not going to work. All right, we got to think bigger picture. The human nature tendency is to make it all about that one given trade. I want you to think a bit more about if your next 100 longs look like Square. Not this one instance, but your next 100 times you get long, you're doing that where you did it yesterday in a setup like Square. I think you're going to be a very profitable trader. Got to put it all in its proper context. If you're an elite trader, like top 1% in the world, you maybe have a 70% win rate on your swing trades. What does that imply? Top 1% in the entire world, and out of every 1,000 trades, 300 to 400 are not going to work. The ones that don't work, they tend to be in a situation like this. Not a Square problem. You just lost the market behind you. Great entry yesterday. Market had other things in mind for now. Steve, I'm short the QQQ futures. As far as where would I short the QQQ? My preference would be not to short it on a 1% gap down. But if you're trying to short it, I think you're shorting bounces into resistance. A bounce into a 15-minute 21, a bounce into a 30-minute 21. I'd imagine we should gap down somewhere near that daily 21 EMA. Which, hey guys, for all I know, that might be huge support. That might be the end of the selling. So kind of taking things minute by minute. The NQ here, yeah, we're already getting a bit of a break. So what I would try to urge you to do is be patient. Take the QQQ futures, for example. $21 EMA is your key level. Let them keep taking it lower. On that first bounce, if that bounce does not take price back above that 21, then I think you look for a short with your stop above that 21. You can do the same thing on a 1-hour time frame, a 30-minute, a 15-minute. The lower the time frame, the more aggressive the entry. Dr. Anthony, good morning, Doc. Good question. That's one alternative as far as getting your leverage. You know, a few different ways we can get our leverage. You can trade the levered ETFs. You can trade the futures, or you can trade the options. I can buy the T triple Q. I can buy an option contract on the QQQ, or I can trade a futures contract. In their own way, each of them brings on some leverage. Different forms of leverage with the same idea, really. All right, guys, a couple more here, and then I got to get dialed in. And then as far as how I'm going to handle Square, there's a saying that re-entry is only a commission away. It's going to gap down under 80 bucks. It's a matter of picking your poison. One poison is at the open, Square takes out the 21 EMA, and I take off the trade. And then 5 minutes later, an hour later, Square is going back up, and I feel like I got shook out. That's one poison. The other poison is Square gaps down under the 21. I try to give it a bit more time, and then 79 bucks turns into 77, turns into 76, and at some point that trade's just totally getting away from me. Given the signals in the market, I'm a bit more inclined to say, hey, let's take a step back, take off the trade. Now we can reevaluate. If I take off that trade and then an hour later, the market rebounds, everything looks good, Square looks good. All right, let's jump back in. Want to do everything in my power today to keep these losses as small as possible. The risk I run is getting shaken out, but I'd rather get quote unquote shaken out than, really take it on the chin. Because I'm thinking a bit more that Best Buy was a beautiful trade, nice and easy. Microsoft was a beautiful trade, nice and easy. Right, same thing for Bank of America. My number one job today, because those trades worked as they should, I want to keep as much of those profits as I can. My bigger fear is getting back all of those profits, as opposed to my fear being, oh, what if I get shaken out? So that is my thinking. But all right, folks, I'm going to let you go here. Mastery members, when I take off the crowd in the square trades, I shall let y'all know. If you want to take them off right at the open, do your thing, but that'll very much be my game plan. And for those of you that follow me into the NQ short, we've got about a $140 profit here. 140 points, rather. And I'm going to keep on holding the short for now. So I'll see y'all this afternoon for our live session. For the rest of you, I'm back tomorrow morning, same time, same channel. Hope y'all found it helpful. Appreciate your time, and